Cash flow is a really critical thing for small business owners. So as a small business owner, you will have a number of obligations for making large payments. Typically, those are going to include things like income tax payments for your business, tax payments for amounts that you've withheld for employee wages, maybe even instalments of tax for the business owners. You've also got your GST, which can be a really big one, and then your other employee entitlements. So things like payroll tax, superannuation, those sorts of things. When businesses are registering for GST and for pay-as-you-go, the most common method that we see people choosing would be a quarterly basis. So that means that they're reporting their income, paying their GST and paying their instalments to the tax office every quarter. This can be a really big financial strain on business owners because once every 3 months you're having to pay a really large sum of money to the tax office. One of the tips for smoothing out the cash flow within your business is to remit your taxes to the ATO and the other bodies monthly. Realistically, you're actually paying the same amount. It doesn't really matter whether you're paying $5,000 a month or $15,000 a quarter, but it certainly hurts the hip pocket a lot less if you're paying smaller amounts more often, and it helps you to keep on top of those debts so that you're not allowing them to accrue too much. Same with your superannuation. A lot of employers will default to the quarterly basis, but you can actually elect to pay your superannuation monthly, which helps to smooth that out. It means that you're reporting smaller amounts more often. Now, breaking it down even further than that, how do you make sure that you have enough money to pay those large tax bills when they come up? For a lot of our clients, one method that works really well is every time you receive money into the business account for sales, you siphon some off straight into a tax savings account. So you can have another account that's set up with your bank. Some banks will actually allow you to do it automatically, where for every amount that comes into your account, a transfer will automatically happen to the savings account, so that when the time comes to pay your BAS or pay your super, you've got that money put aside. Now, as for how much you need to pay, it really depends on the business. For some businesses, it may be as simple as putting away a third. For some businesses, that may be too much. If you're a business that doesn't have a lot of expenses and you're earning a high income, that may not be enough. So we can help you with budgeting. We can certainly help you with working out what we anticipate your tax liability is going to be based on your income and your expenses, so that you can put aside an appropriate amount. And it really doesn't matter whether you are a sole trader or a partnership or a trust or a company. There are going to be tax implications. Someone's going to have to pay the tax somewhere along the line. So you do need to be putting those amounts aside. When you start a business for the first time, it's really up to you to make sure that you are putting aside that tax, because the tax office are not going to start asking you to pay those instalments of tax until you've lodged your first tax return. So let's say that you're planning to set up a business now and you're going to start your business trading in July. So we're looking at July. We've got another full 12 months before the end of the financial year. You may not get around to doing your tax returns straight away. So sometimes it might be nearly 2 years after you've earned the income before you're actually remitting that tax to the ATO. That can be a really long time. So it's really important that in the interim you've been putting aside that tax, so that every payment comes in, you put aside a percentage so that you've got the money to cover the tax bill. Once you lodge that first tax return, the tax office are going to see the business income and they're going to ask you to pay instalments. So they're going to estimate what your tax liability is going to be. That's going to assume your income is around about the same every year. So if your income is on an upwards trajectory and your business is growing, it's still not going to be enough to cover the tax bill, those instalments that you're paying during the year. So you're still going to have to continue to put some more aside. Budgeting and cash flow management is the best friend of small business owners when it comes to finances. So we can certainly help you when it comes to putting together some tools that are going to help to plan for that, so that the big bills don't come as such a shock and we're well aware of them. It's always best if you can prepare your compliance work as soon as possible. So if we can help you do your business accounts in July, doesn't necessarily mean you're going to have to pay the tax any sooner. We can just help you plan for it a bit better, rather than if you wait until the 15th of May and we're lodging a tax return, the best we can do is give you 3 weeks notice and you're going to have to pay the tax office. So forward planning, let's get those BASs and those tax returns done really early in the piece so that you're aware of what your obligations are going to be and you can keep up to date with your payments and make sure that you have enough money put aside to pay those debts when you need to. We'd love to be more involved with your business, so if cash flow management and budgeting is something that we can help you with, please give us a call, set up an appointment. See you next week.